Hi, welcome to Control and Compound with Darren Mitchell. I'm your host, Darren Mitchell, and joining me today is Christina Wyatt, a wealth coach at Control and Compound Financial. Hi, Christina, how are you today?
Hey Darren, I'm doing great. So happy to be here.
So, we have an exciting podcast today. We're going to talk about the ideal place for Canadians to save money. And let's face it, Canadians aren't saving enough money, or many Canadians aren't. So, before we get into the actual characteristics we're looking for in this ideal place, let's talk about savings in general. We are big believers at Control and Compound that Canadians need to have a systematic approach to saving money. You need to have every month or every year X amount automatically coming out of your bank account and into some vehicle where you can start saving money. What happens is people think they want to save money or they're going to wait till the end of the year to save money. All of a sudden, it's 3 or 4 years down the road and they still haven't saved any money. So, we want a systematic approach to start saving money. And before we get into some of the ideal places to do this, what are Canadians doing typically with respect to savings, Christina, or where are they saving their money today?
Well, like you said, a lot of Canadians aren't saving, which is a huge problem. So you first got to get that savings going. Like you said, you got to pay yourself first. So that's the first step. But then when they start to save, where we're seeing them put their savings are into just a few examples of the account. So one would be a high interest savings account that's offered through the bank. Very low interest right now. We're seeing maybe 0.05%. So low earnings there. We're seeing people save in the stock market, so in investments or cryptocurrencies, savings in there. And then we're also seeing them save, in GICs where they're locking in that money to try to get a higher return than that 0.05 in those accounts, all having that fear of inflation when you're looking at those high interest savings accounts and those GICs for sure.
Yeah, those are the most popular places where Canadians are saving today. And I equate it to really, they kind of, Canadians tend to separate their savings into two different wealth buckets. You have the first wealth bucket that is my short term savings, right? And that typically is a bank account where you're putting money in there and you say, great, I want liquidity, use, and control. I want my money to be liquid so I can use it. I want to be able to use it. I want to be in control of it. And I want it safe. But when you do that, you're kind of giving up the growth. You mentioned a quarter point or less on a fully taxable basis, so you're giving up the growth. So the second bucket Canadians typically go to first is, well, let's save for the long term. And that traditionally is in the stock market inside an RRSP. Now, you have hopeful growth when you put it in there, but you give up that liquidity, use, control, and safety. You're taking some risk. You're giving up control of your money to hopefully get that long term growth. And what I love about this infinite banking policy is it's kind of the best of both worlds. It's just another wealth bucket we're able to put money in. We're able to use that money in the short term. We're able to access 90% of the cash value to take advantage of opportunities, deal with emergencies. It's safe, it's liquid, we have control, but we also have that long term growth. So we have short term benefits as well as long term benefits. And one of the long term benefits is it grows completely tax free.
Yeah, Darren, that's a very good point. The tax-free thing, the tax-free point, when people are looking at their savings. And one thing I want to point out in what you're saying as well, when they're talking long term, there's a difference between investing and saving, right? So we're
Mm.
talking savings here, where we want to save, not where we want to invest. There's lots of great places to invest. We're talking about savings here. And one key point is that the tax-free growth. A lot of people save, they put money into an RSP to save, they put into these tax-free savings accounts. They're not thinking of those tax consequences that come later down the road.
Yeah, and I mean on the short term savings on a bank, you could have $100,000 in your bank account, but if you're earning a quarter of a percent, and you wouldn't even get that today in your bank account, well, that's $250, and that $250 is fully taxable. So you could pay up to half of that in taxes. So all of a sudden, you invest 100,000 or you save $100,000 in a bank account, and you're earning about $10 a month after tax. So tax is a huge part of or a huge thing you need to look at when you're talking about where to save money.
Yeah, and And on that, so saving money. We talked about where we want to, what we want to talk about today, in finding that ideal place to save money. So if we sat down and we were sitting at a boardroom table and we had that whiteboard there and we're brainstorming on the whiteboard, Darren, what are you going to write down on that whiteboard as an ideal characteristic for a place to save your money?
Yeah, well, for me, that there's all kinds of great characteristics, but it's the first four that I'm going to mention that are the most important to me. Number one, I want to be in control of my money. I want to know that if an opportunity comes along, I can take advantage of it, or an emergency comes, I can deal with it. I want to be in control. I don't want to give up control. I want that and asset, so my money's inside the infinite banking policy, and it's taking advantage of a real estate or business opportunity or dealing with an expense. Legally multiply my money like a bank would be ideal. And I want that uninterrupted compounding. I want to get on that compound interest curve and stay there for the rest of my life. And we mentioned tax. You mentioned tax earlier. The key to tax is I want, in an ideal situation, my savings to grow tax free. I want to be able to access them tax free. And when I die, I want that money to come out tax free. So for me, those are the first four: control, multiply my money with an and asset, uninterrupted compounding, and tax free growth, spend and die. So what other characteristics are we looking for? Again, we're at the whiteboard designing an ideal place for Canadians to save.
Yeah, I don't think anybody's going to debate you on those top four for sure. But a couple other ones that come to mind are fees. So low or no fees. That would be ideal. We hear about it all the time and we see it. Fees really impacting returns, long-term returns. So having low fees is very important. The typical mutual fund in Canada, you're looking at a MER, management expense ratio, around 2.2%. One of these, federally regulated, very low fees, like we're looking around 14 basis points or so, right? So low fee, ideal. Another thing is volatility. So no volatility. When I want to save my money, I want to make sure that I'm in control. And when there is volatility, I'm out of control, right? So I don't want to see that volatility inside of my savings account. In one of the infinite banking policies, we measure volatility with standard deviation. The standard deviation in one of these is around 1% or less. The stock market's 16%. So we need a low volatile place to be able to save our money when we're talking ideal.
Yeah, great points. And then I like to call this my opportunity/emergency fund. Emergency fund isn't sexy. Opportunity fund sounds a lot better. So people ask, well, how much should I be saving? And I'm like, well, how big of an opportunity fund do you want? So I want to be able to take advantage of many opportunities and large opportunities. So I want my opportunity/emergency fund to be as big as I want. So that's why I'm putting so much into this infinite banking into my infinite banking policies. But the other thing I love is I love that I can use this in the short term. So I can access 90% of my cash value. So I can go to real estate, buy a fourplex, a condo, private lending, whatever I want to do with real estate or business. But at the same time I'm using that money, I'm also saving for retirement or saving for long-term growth. So emergency/opportunity funds, another key one. Back to the whiteboard, Christina, what other characteristics are we looking for in this ideal place for Canadians to save?
Well, I think I'd like to see guarantees of always going up, right? Guaranteed to go up. We love seeing those guarantees when it comes to our savings. With the infinite banking policy, it is guaranteed to always go up. It's guaranteed to never go backwards. And it's got a 150 plus record of paying a dividend out each and every year, right? So guaranteed to always go up, ideal. Another one would be having a competitive return. Now, I know that these aren't the highest returns by any means. That's not what we're trying to say here. But to even have a competitive return on your savings is huge. These are earning anywhere between 4 and 5.5%, which is much better than that, the high interest savings account you might be looking at, right? So we've got competitive rates of return. And then our dollar also doing more than one job. I think that's important. Real estate investors understand this very well. They always always want their dollar doing more than one job, having it working in more than one place. And that's what this does for you, because you're gonna have a death benefit as a job, but you're also gonna have it growing. You're gonna have creditor protection built in there. You can have terminal illness coverage built in there. So your dollar's doing more than one job at one time. And if I can have my savings doing more than one job, I am going to be very happy about that.
Multiple jobs with a multiplied dollar, and that's how we get ahead. The other one that I really love is the unstructured loans. So, and again, an ideal investment, we're going to have this in an infinite banking policy. But if I have an unstructured loan, that means I can access 90% of my cash value, no questions asked. I don't need to justify why I'm using it, I don't have to say when I'm going to pay it back, how I'm going to pay it back, if I'm going to pay it back. If I think it's a good opportunity or I think it's an emergency and I need that money, I can access that money anytime and I can pay it back when, how, and if I want. And then finally, we have a death benefit, right? It would be a great little bonus if you had an ideal place to save money and it came with the death benefit in the unexpected event that you did die. So really, we're trying to encompass all these different things, all these characteristics in a perfect investment or perfect savings vehicle. And that perfect savings vehicle, in our opinion, is without question an infinite banking policy. What other characteristics, Christina, have we not touched on? What are the hot topics today that people are talking about?
I think that one of the ones that we missed was, being able to sleep at night. I think that's a huge one. I don't want to have to worry about my savings. I don't want to worry about it. I want to sleep like a baby. I think that's very important.
Yeah, I consider my infinite banking policies to be like a security blanket or a force field around my finances, right? No matter what the world throws at me, increase the tax rate. Well, great, I'm in a tax-free environment. The market crashes, I'm okay. I get sued or go bankrupt. Great, I have creditor protection. What if I don't make it home from work someday? Well, there's a death benefit for my family. So in times of uncertainty, this to me is just brings absolute certainty. So, for this portion of my financial affairs, I have absolute certainty and it allows me to take advantage of other opportunities and deal with emergencies. And then maybe the last one, Christina, hot topic today is inflation. When you're earning 1% or 0.5% or 0.25% in a savings vehicle, you're paying 50% tax. You're not keeping pace with inflation. Inflation is impacting everyone these days.
Yeah, for sure. I saw a meme there the other day online. It was, inflation is so high, even Tom Brady's coming out of retirement. So it is impacting everybody.
Love it. Okay, so that's kind of what we're talking about. The ideal place for Canadians to save money. We believe it's an infinite banking policy. All these characteristics, I go through them in detail in my best-selling book, Be the Bank. You can check it out on Amazon. Thanks for watching. Thanks for listening. Have a great day. Thanks for tuning into this episode. Don't forget to like, subscribe, and hit that bell button so you always know when new content is coming out. For more helpful tips and tricks, visit our Instagram, Facebook, or TikTok pages at Control and Compound. If you want to reach out to us directly or work with us, visit our website at controlandcompound.com. The links are in the show notes below. See you next episode.